If the stock market were to suddenly crash 40% tomorrow, here's exactly what I do with my over $200,000 portfolio. First thing I definitely wouldn't do is freak out, because that's probably the worst thing you could possibly do when the market's headed aggressively in either direction. I definitely would want to avoid scrolling TikTok, hearing about how it's the end of the world and the stock market's going to zero. And I think just the first thing that I'd take a step back and remember is I do not invest any money that I need for the short term. Anything that I believe I'm going to actually need to use within a 3-year period, I put it all up in a high yield savings account. That way I'm not forced to sell anything at a loss if the market drops. So moving on to step 2, I hold a 5% minimum cash buffer on my investment portfolio for this exact reason. The thing that separates a lot of the best investors versus the average retail investor is one simple thing: making decisions based on logic rather than emotion. Start to review some of my positions. Google, Microsoft, Berkshire Hathaway. Did anything about these companies fundamentally change since the market dropped? The chances are 90+% of the time, as long as you're buying real strong businesses, that nothing has fundamentally changed even if the market crashes. If that were the case, this would be the perfect time to start considering, okay, should I be buying more of this stock? I would be getting access to the businesses that I've been buying for a much more expensive price, now at a discount. Not to go off topic, but I see a relation with this in crypto right now. It's one thing if you just don't believe in crypto and you never wanted to own it, but so many retail investors were buying Bitcoin over $100,000 all the way up to $126,000 and now want nothing to do with it, simply just because its price has gone down 50%. That is the worst logic to have with investing. Moving on to the second thing that I do, which would help me decide my next decision, I review my cash position. I definitely wouldn't be looking to dump every dollar of cash that I had on the day it drops, because the truth is, nobody ever knows where the market bottom is. Anybody can make a prediction, and of course somebody's going to have to be right at some point. But the thing is, nobody ever truly knows where the market bottom is in a crash. That's exactly why I'd implement my dollar cost averaging strategy, which I already use on a daily basis, just buying at daily increments. However, I would definitely consider raising it at that point. Last thing that I do is make sure that I still have income coming in so I can take advantage of this crash. Every extra dollar that's coming in during a market crash is just giving me more opportunity to buy the businesses that I want to own at a cheaper valuation. Having a system that doesn't involve emotion around managing your own investments is so important. That's exactly why I built an AI investment committee that's helping me run my own portfolio now. Anyways, make sure you hit that follow button if you haven't already, and if you guys are interested in the AI investment committee idea, DM me system.